students. You are all welcome to FGGC lesson. So today I'm going to introduce a topic called balance of payment. Balance of payment. But before then, today is 28th of November 2025 and our topic is balance of payments. At the end of this lesson, you are expected to define balance of payments. 2, you are going to identify the components of balance of payments. 3, you are going to outline the types of balance of payments. And number 4, you are going to explain the method or ways of financing deficit balance of payments. And then finally, which is number 5, we are going to solve the mathematical aspect of balance of payment. So I want you to pay attention, because at the end of this lesson, you'll be able to know all the objectives of this lesson that I mentioned earlier. So first and foremost, what is balance of payments? Balance of payment is a financial record showing the summary statements of a country's economic transaction with the rest of the world. Let me repeat again. What is balance of payment? Balance of payment is a financial record showing the summary statement of a country's economic transactions with the rest of the world over a period of time, usually 1 year. So balance of payment is telling us about the exports and imports of goods and services. So in this balance of payments, you are going to see the activities of the government in terms of exporting goods to other countries of the world and importing goods from other countries of the world. And one thing I want you to note also is that this balance of payment is yearly affair. For example, this year is 2025. So all the economic activities or transaction of the government this year is what will come on balance of payment, not in the previous year. It's only this year. So we continue. And I want you to note that whenever a country exports to other countries of the world, it means credit. Then when we import from other countries of the world, it means debit. And our credit is the same thing as export. When we export, we earn foreign exchange. Then we move. Another thing that I want you to note is the components of balance of payments. The components of balance of payments. We have 3 components of balance of payments, or you can say the 3 main accounts of balance of payments. Number 1, we have current account. And what is current account? Current account is telling us about currently produced goods and services over a period of time, usually 1 year. I want you to note this, that we are very mindful of the year. That is 1 year. It is 1 year affair. So in this current account, they are of 2 types. Number 1 is visible trade account. And what is visible trade account? Visible trade accounts are those goods that we can see and we can touch. They are also called merchandise or tangible goods. They are our exports to other countries of the world. And I want you to know that in our country, what we export to other countries of the world are agricultural products like cocoa, groundnut, ginger. You know them, of course. They are our exports to other countries of the world, and they are visible trade account. And visible trade account is the same thing as balance of trade. Let me repeat again. Visible trade account is the same thing as balance of trade. Okay, remember what we are talking about? We are talking about the components of balance of payments. And I told you that they are of three types. Number one, current account. And what is current account? It is an account that talks about the goods and services produced in a country over a period of time. And it is of two types. One, visible trade account. Those things that we can see, we can touch. Number two, invisible trade. And what is invisible trade? Invisible trade are the services. For example, insurance, tourism, banking. They are those things that you cannot see. That's why they call it invisible trade account. They are the services that a country can render to other countries of the world. For example, advanced countries, they render services to our own country. For example, all these Julius Berger that you are seeing in our country, constructing roads, dams, schools, they are from foreign countries. That's an example of what? Invisible trade. Then let's go to number two of component account, which is capital account. And what is capital account? Capital account is the inflow and outflow of investment or money or capital from one country to another. At times, it is in form of loan. That is capital account. Inflow and outflow of investment or money from one country to another. For example, when Nigeria borrows money from World Bank, we call it what? Inflow of money. We are borrowing from the World Bank. That is inflow of money, and it is what? Capital account. Remember what we are talking about? We are talking about what? The components of balance of payment. The last one is gold movement account. Gold movement account can as well called monetary movement account or financed account. What is gold movement account? Gold movement account shows how the balance on the combined current account and capital account is settled. For example, in current account we have 200, while in capital account we have 300. You can see that they are not balanced. So both of them, the current account and capital account, we now go to gold movement account to balance each other. Meaning that current account that was 200 million, for example, and capital account that was 300 million, they will now come down to gold movement account to balance themselves. Meaning that current account will be 300, while capital account will be 300. That is gold movement account. So these are the three components of balance of payments. Okay, we move on. Let's talk about types of balance of payments. I want you to know that component account is quite different from types of balance of payments. There are two different things. We have two types of balance of payments. Number one is equilibrium balance of payments. Of course, we know what is equilibrium. When we are talking about equilibrium, we are talking about equality, equal. So what is balance of equilibrium balance of payments? It is when the total receipts from other countries on the combined current account and capital account equals to payments to other countries of the world. Meaning that the export and the import are equal. That is equilibrium balance of payments. We are talking about equality here. For example, what Nigeria is importing from other countries of the world and what they are exporting to other countries of the world are equal. That is equilibrium balance of payments. Then number 2 types of BOP, that is balance of payment, is disequilibrium. Of course, we know what is disequilibrium. It means not equal. And what is disequilibrium balance of payment? It is when the total receipts of a country in the combined current account and capital account are not equal. Both of them are not equal, meaning that the import is more than the export, or the export is more than the import. That is disequilibrium. Then we move on. We have 2 types of disequilibrium, and the 2 types are balance of payment surplus and balance of payment deficit. That's 2 types of disequilibrium. Then what is balance of payment surplus? From the name, of course, balance of payment surplus is telling us about when a country's export is more than its import, meaning that a country keep on exporting to other countries of the world. The result of it will be what? More money. We will receive foreign exchange. We will receive more money. Meaning that when our export is more than our import, that is balance of payment surplus. And how can this balance of payment surplus be used? We have excess money in our account. We have excess money in our federal government account. How can it be used, this surplus? It will be used to increase what? Foreign investments. When we have more money in our account, the federal government will be investing even outside, just like how South Africa invested in Nigeria. Like this GoTV is from South Africa. Yes, even DSTV, MTN is from South Africa. So South Africa invested in Nigeria, perhaps because of balance of payment surplus. So also, when our government has surplus money, how can they use it? They will not use it to invest in other countries of the world. That's number 1. Number 2, they will increase our foreign reserve. They will go to the World Bank to increase our foreign reserve. Number 3 now, payment of our debt. Of course, all of us, we know that we are indebted. Nigeria is owing IMF, World Bank. So when we have balance of payment surplus, the government will now use this money to pay off our debt. That is how to use balance of payment surplus. Okay, let's go back to types of balance of payment disequilibrium. We've talked about number 1, which is surplus. Let's go to number 2, which is deficit. Of course, we know what is deficit. Deficit is telling us about when the countries keep on importing from other countries of the world without exporting. It means that our balance of payment is unfavorable. We are indebted. That is balance of payment deficit. When our import is more than our export, we keep on importing everything. We keep on importing without exporting. So most countries experience such, and our country Nigeria is one of them. So we have, over the years, more than 10 years, we keep on experiencing balance of payment deficit in our country Nigeria. Because of what? We keep on importing. Every small thing we import, especially in technologies. So we import, and it will affect our what? Balance of payment. Now, when we have balance of payment deficit, How can we finance it in order to balance up our balance of payments? Number one, by borrowing. Borrowing is not a good one, but we have to borrow in order to balance what? Our balance of payments. We are going to borrow short-term loan. We borrow from advanced countries. We borrow from World Bank and we borrow from IMF. Number two, we can receive grants and aids from advanced countries. And when we receive, the government will now use it and now what? Use it to finance balance of payment deficits. I hope you understand the lessons so far. From the explanation that we had, we are going to solve the mathematical aspects of balance of payments. As you can see on the board, the mathematical approach to balance of payments. Oftentimes, we normally see such as a composite equation in economics. This equation is one of the composite equations in WAEC. So I want you to pay attention so that you'll be able to get it very well in case it will come out in WAEC. So look at the equation given. The equation says the table below summarizes the position of a country's balance of payments in the year 2000. We were given a table, and look at the table. I want you to study the table very well. Look at the exports. The export is in $1 million. So take notes. When you fail to use the naira sign or dollar sign, probably they will deduct 2 marks from your work. So when you look at the imports, you find out that the import is in $1 million. Let's go to the exports. What Nigeria is exporting to other countries of the world, you can see minerals, $640 million. Timbers, $146.50 million. Shipping, $555 million. Then we see cocoa, $240.50 million. Then the last one is tourism, $105.20 million. Let's quickly go to the imports. Our imports are the machine, $560.50 million. Then we see spare parts, $280.00 million. Then we see the pilgrimage, $220.00 million. Then we see the oil and lubricants, $150 million. Then the last one is food and tobacco, $360 million. Now, the question says the total foreign exchange receipts increased by over 10% above that of 2019. Nevertheless, this was not sufficient enough to balance the country's current account. The federal government therefore took a short loan of $200 million from IMF. Then the question is, so they expect us, and I expect you as my students, to calculate the following. These are the questions given. So number one, we were asked, and you are asked to calculate the balance of trade. Of course, you know what is balance of trade. I told you what is balance of trade. Balance of trade is the difference between visible export and visible import. That is balance of trade. And this balance of trade, just like what I told you, is the same thing as visible trade. So take note. Number two, they asked us to compute the balance on invisible trade. Number 3, what is the value of the balance on capital account? Then number 4 question is, what was happening to the prices of countries' major exports? So 4 questions were given to us to solve. So I want you to pay attention so that we are going to solve it together. So now, I want you to still study the table together, and you know the ones for visible and invisible. So let me clean the board so that we solve it together. We are asked to find or calculate balance of trade. Of course, I told you what is balance of trade. Balance of trade is the same thing as visible trade. And of course, you know what is visible trade. Those things that you can see, they are as well called merchandise. The tangible goods that you can see, like cocoa and so on and so forth. So let us look at the exports. Under export, we can see mineral, $640 million. So solution. Number 1, we were asked to find balance of trade. Balance of trade. And what is balance of trade? The formula is the total value of visible export minus the total value of visible imports. And when you look at the board, what are our visible exports? We have mineral. Our mineral is visible export. Our visible exports are mineral is $640 million. Plus, again, look at timber. Our timber is $146.5 million. Plus, what again that is visible? We have cocoa. Cocoa is visible. And cocoa is $240.5 million. Plus, no, minus visible export. What are our visible exports? Those things that we can see are visible. So our visible imports are machine. Machine is $560.50 million in brackets. And what again? We talk about spare parts. Spare parts is $280.00 plus what again that we can see? We can see oil. $150.00 in dollars, $1,000,000 plus food and tobacco. That is $360.00. So if you are with your calculator, you add So when we add, it will now give us our exports. We are going to add our exports together. Our exports 640 plus 146.50 plus 240.50. All together it will give us 1027 million dollars minus our visible imports, and the total of our visible imports is $324 million. So can we find the difference between two of them? The difference between the visible exports and visible imports. When we minus $324 million from $1027 million, we are going to have minus, we have 1 3, no, this is, sorry, when we add our imports, we are going to have 1351. Sorry for that mistake. This is our import, visible import. Our visible import is $1351 million. So let's find the difference between two of them. So the difference between two of them is minus 324 million. This is our final answer. We are having minus. Why are we having minus? We are having minus because our import is more than our export, meaning that we are having unfavorable balance of trade. Our balance of trade is deficit. Why? Because what we exported to other countries of the world is less than what we imported. That's why we are having minus $324 million. That is our balance of trade. Understood? Let's go to the second question. The second question says that we should calculate balance of invisible trade. That's number 2 question. Number 2 question. Balance of invisible trade. Balance of invisible trade. Of course, we know what is invisible. Those things that we cannot see. They are services to other countries. Not to other countries, even other countries coming to our own countries to render services to us. So what are our invisible trade? When we look at the exports, our services to other countries, we will see shipping is our services to other countries. Then we are going to have shipping is $55 million plus tourism. We have tourism, that's our invisible trade. Tourism is $105 million. That's all for exports. That's all for export. So minus the services under imports. What are the services under import? Of course, the services under imports are the pilgrimage. That is the only services there. That's what we imported from other countries of the world. and the total amount is $220 million. So we are going to look at the difference between the invisible services under export and invisible services under import. So let's add the invisible services under export. When we add these two, we are going to have 160.20 million. Okay, sorry, I have 20 here. Sorry, I have 20 million here. Minus 220.00. So when we find the difference between two of them, our final result will be still minus 5. This is a dollar sign. This is a sign. $59.8 million. That's our visible trade. We are still what? Unfavorable. Minus $59.8 million. That is to say that our import services is more than our export services to other countries of the world. We are still indebted. So let's go to number 3 question. Number 3 question says that we should calculate the balance on capital account. When we look at the table here, the table given, capital account is not given. But the question says that the federal government now borrowed $200 million from IMF. So that's $200 million from IMF is our capital account. Our capital account. So we are going to number 3. We are calculating our capital account. So balance on capital account. Number 3, we should calculate balance on capital account. Balance on capital account. And what is our balance on capital account? That's $200 million that the government borrowed from IMF. So the $200 million borrowed from IMF. Of course, you know the full meaning of IMF. International Monetary Fund. Borrowed from IMF by the federal government. Is the capital account. Remember what is capital account? Inflow and outflow of money in form of loan or investment. That is capital account. So this number 3 question, capital account. So the last question now, which is number 4. The last question, number 4. Number 4 question says, what was happening to the prices of the country's major exports? When you look at the major exports, what is happening? The major exports are increasing. They are increasing. But still, the importation is more. So what is happening? So I will tell you that what is happening is that the major exports of the country, of our country, keep on increasing, keep on rising. That is what is happening. The exports keep on increasing, keep on rising. That when you look at this table now, you will find out that look at the major export. 640 Look at another one. Another one is $146.50 million. When you compare it with the shipping here, look at the shipping. $555 million. So when you look at this, the mineral, when you look at the timber, they are more than this. But the problem is that the import is more than the export. That's the fact. So number 4 answer says that the major export of our country keep on increasing. It keep on increasing. But the import is still more than the export.